Right, part number 5. Disclose. Therefore, identify this as a note. The non-current asset held for sale note to the annual financial statements of KoiKoi Ltd for the year ended 31 December 2011. According to the requirements of IFRS 5, non-current assets held for sale and discontinued operations. Note: accounting policy notes are not required. Ignore comparative information, ignore VAT and tax. Okay, take this one step back. What do you need to disclose? Look at the left bottom side for me, please. You need to identify what is your non-current asset held for sale, when this happened, why this happened, where did we recognize this, and how did we calculate this. Right, now you are able to obtain this on your revision page as well. Okay, important, it is on your revision page. But what I want to indicate to you is that we will have to recognize our, just look at this, you need to please work through this on your own. We will have to identify our measurement. Remember, again, identify what's the difference between initial measurement and subsequent measurement. We are looking at an individual asset, only one asset, it's a patent. The entity shall measure a non-current asset classified as held for sale at the lower of its carrying amount at the moment of reclassification and fair value less cost to sell. And that difference will then be our impairment. Therefore, if we look at the requirement, we need to disclose the note for the end of 31 December 20.11. Okay, so when we look at this, 31 December 20.11, we know if we identify from the information above that the carrying amount of our asset will be the 621,890. Now we need to determine the fair value less cost to sell, because we will have to calculate the non-current asset at the lower of our carrying amount and fair value less cost to sell. Fair value less cost to sell, they've provided this to us. This will be 400,000. Therefore, our fair value less cost to sell will be the 400,000. Now, identify here, guys. There will be an impairment of 221,890. Look at your steps. Step 1, identify the carrying amount. 2, fair value less cost to sell. 3, your impairment. If you were to recognize this, you would have debited your non-current asset held for sale, which is the patent with the 621,890, credit your intangible asset, which is our internally generated asset. Sorry, the patent 621,890, right? And then you would have debited our impairment loss, which is in our profit and loss, credit our non-current asset held for sale with a 221,890. 221,890. Right, now let's have a look at the note. Non-current asset held for sale on 31 December 20.11. This is your when KoiKoi Ltd decided to dispose of the said lawful patent. This is your what? As the patent was not generating income as initially anticipated. This is your why. It is expected that the sale of the patent will take place. This is an important one, guys. When this will take place, 28 February 20.12. And the sale will be for cash. Therefore, if you want to include here a date when the sale will take place, then we need to include our line item patent, and that the patent will now be carried at 400,000. Fair value less cost to sell. If you look at our journal, add journal 1 plus journal 2 here at the bottom. 1 plus 2, this will be 400,000. An impairment loss of 221,890. The amount was recognized upon initial classification of the patent as a non-current asset held for sale. Then, where the impairment loss was included in our profit or loss section of the statement of profit or loss and other comprehensive income and the other expenses line item. Again, why other expenses? If you look at the nature of the business, it's to manufacture. And this is our patent.